Hey everyone, welcome to Breakout Wednesday for the 28th of Feb 2024. It's currently 2 p.m. on the West Coast, 5 p.m. on the East Coast. First of all, remember this is not a financial advice. I'm not a financial advisor. This is simply a video blog on how one trader sees the market, and everyone needs to take responsibility for their own decisions. Okay, so let's just smack through this week. Here's a chart of the All Ords, which, you know, it hardly looks bearish, right? It looks really nice up here. It's just tightening up. Have a look at all the kind of indices. Let's just go flick to XJO. Have a look at gear, my beloved gear that I haven't talked about in a few weeks. And, you know, they're all kind of looking pretty constructive, okay? And they're definitely in uptrends. And so, you know, all the signs are they're in a bull market, right? So, look, quickly rattling through some trades I've been talking about last week, okay? So, real quick, I'm going to get to some new stuff. Suncorp, just ignore these. Suncorp. Obviously, you know, had a gap up, earnings came out. I mean, they're just making shit tons of money, right, with these higher interest rates. And so, boom, you know, that's just classical base. And the thing about the insurance stocks is that they, you know, it will take a while. I expect this to come back and it will churn, but, you know, if I'm right about this, I'm just going to stick with this move and just stick with it for, you know, hopefully the next year or so. IAG, and just no biggie about this pullback. It happened on tiny volume, still holding tight. Pretty bullish on it. Okay, it's pretty rare that bases like this, when all the, I mean, I talked about this so much. I promise you, I'll stop talking about insurance stocks. But when all the names are setting up in the same sector at the same time, with massive, gigantic stage one bases, with blue sky above it, with interest rates high, and these guys absolutely just printing cash. You know, everything is just kind of pointing towards it. Doesn't mean it will happen. I might be wrong, but I just think that it's all starting to play out in front of our eyes. Okay. Now, some of the other trades I've talked about over the kind of last month or so. This ANZ trade that just left this huge base back here and went for it. Well done to those who got it. Okay. It was a lot of. It was just the writing was on the wall there. You know, big bases. It's just a foolproof system, really. I was talking about SSM last week. I didn't trade it, but I was talking about this candlestick pattern. We will at Protrader be, you know, bringing out a new scan. I've already started working on it with some devs. It's going to be pretty sick, and you know, that'll come later this year. Just a heads up for Protrader members: if you log in and there's no data for today, just log out and log back in. Okay, we've got a couple full-time devs doing around the clock work on this. The data issues of, you know, weeks and months ago are gone, right? Just bear with, just chill out a little bit, log out, log in. I promise you it's there. If it's not, just email us and it'll be fixed within 15 minutes, okay? You know, we really are doing some kick-ass things with this system. We have so much stuff in the pipeline. An exclusive membership area we're launching soon. I'm not going to just, you know, bore everyone with this, but yeah, you know, that is a bit of a rundown on that. Okay. The NVDA trade, that's a bit of a sidetrack. The NVDA trade, I mean, holy shit! When it was here, I was talking about it. This went for a massive run. It was just going to kind of make my year. You know, it's done that. You know, and it was. I just hope we get some more trades like that coming along soon. Okay. And the FCNCA setup I was talking about last week has left its base, okay, and I'm in that. We'll see how that plays out. I got a tight stop. I'm just going to, hopefully that runs up. It's just had this huge base, it reset, kind of faked out again, reset, and bang. And this is the right-hand side one's the tightest of it all. So, you know, I'm feeling pretty good about that setup. We'll see how it plays out. Now, a quick scan that I'm kind of doing a lot of. Just, I've clicked the, get rid of that. So within 2% of the last 100 days, okay, this one here, right? That's what I'm trying to figure out here. Let's just go to market ASX and put less than 100,000 and can scan that. Okay, I'm just doing this scan every day because it's finding stocks which are just sitting up really tight near highs, okay, and just basing. And there's a few here I just want to quickly rattle through. One of the first things it does is this scan is it finds stocks which are just not quite set up, but are tightening up here with all these inside bars looking like it's gone to, okay. I'm not saying this is a trade because it's not for me yet. It needs to base for longer, but it certainly gets whacked in a watch list, and I just see that can just continue to tighten for like another week, in which case it would be just a fantastic setup. There's heaps of finds which are then whacking watch list. JXHX is tightening up there. OML is tightening up there. It came up, and it's just these tiny little tight patterns with blue sky above it is really my bread and butter, but they just need to base for longer. So when I see these, I just whack them all on watch lists. Okay, the ones that have come up there that I do really like at the moment, and is one of them is GDC. Okay, now I was talking about GDC ages ago, but for those who listen all the time, but this is now just set up in this huge base, massive resistance. Okay, if we look at a weekly chart, it's pretty clean. Look at a daily chart, it's clean as, and I think more to the point, it's in a really good kind of space, so like this data center space, and it's got some fundamental headwinds behind it, and yeah, so you know, that's probably one of the nicer bases around right now. It's not the most liquid stock in the world, but it's certainly setting up there. It's not complete, you know, it is actually, sorry, it is complete blue sky above it, isn't it? So so that's pretty cool. Okay, so GDC came up in that scan. Another one that's come up, just quickly, so time we whack it in, is DDR. Now, obviously, I was trading this back here for everyone that was, you know, watching, and now it's setting up, and this needs to tighten more. But you know, this is a good company. It's got good fundamentals, and it's once again just basing. So I've got that in a watch list. See if it can just base away for a bit more. It's not quite as kind of ready as that GDC one for me. And then MIR, I have a feeling its earnings are coming out pretty soon. Okay, I'm not going to trade this right before earnings and get stuck with it, you know, into earnings. For example, like I was looking at Flight Center that was in a Davis box last night, and then, you know, obviously, and then looked at today and bang, you know, it's just, I just think taking a trade, if I'm going to trade, you know, I talked about this a lot last week, but I'm going to trade, take a trade before earnings, it would need to be kind of, you know, it would need to be like at least a week or 5 to 10 business days before the earnings. So I would need to think to myself, hey, I can probably get in and get out before earnings, okay? In which case I might still take that trade. But if there's very little time between the trade, you know, starting and earnings, I'm not gonna take that risk on, because the risk is just gigantic. Like if we, you know, look at some of the stuff that's been happening, DGL had a huge gap down last week, you know, and there's just, you know, the market is a brutal place, and you know, gambling on trades right before earnings is not something that I think is smart. Now, so that is really all for the setups this second. So I just had to pause there. So that's kind of all I've got to talk about on the ASX. But on the NASDAQ, there's just one stock. I'm kind of loaded up on positions. I'm just riding this market high. But NATR is kind of sitting up here in a big Davis box. Had this base here, now it's forming another base. It's tightening, and you know, it doesn't have complete blue sky above it, but it's, you know, it's a couple years since it's made, you know, taking that high out. So I'm just watching that tighten away. A lot of the leaders, like obviously NVDA is going well, but you know, you see Google just having a little sell off. Apple is as well, and you know, I'm kind of just keeping an eye on these large caps in trying to, you know, if I can pick a nice time to kind of get into some of these, I will. You know, I have been watching Apple. I just redrew that line on there, but you know, I just think that if we're in a bull market, you know, I think Apple's been underperforming, and it, you know, probably will have a decent move if this bull market continues. Okay, so keep an eye on all that sort of stuff. You know, there's a lot of stocks which I think, you know, will probably set up with time that I'm just, you know, never take my eye off. Now, before I piss off, pretty short one this week is there's this book I've just been listening to. I read it a while ago, but I've been listening to the Audible lately to complete TurtleTrader. It's really interesting. I think, you know, the author's kind of a little bit annoying in the way he talks, I think, but and there's a little bit American at the start, just crapping on forever about irrelevant shit, but eventually it gets into a lot of good details about trend following, okay? And I think that one of the perfect examples is, and one of the main differences with trend followers is that trend followers don't put price targets on things, okay? And in a bull market, a trend follower can just do so damn well. So the classical thing, right, with a pattern trader, okay, is you get GTK, and you add that depth of that pattern, obviously, to the breakout zone, and then you get out when the profit target's hit, and you just move the hell on, okay? Whereas a trend trader thinks that's stupid, because the whole point about a trend is that trends continue for longer than anyone will think once motion's in place and once the trend's in place, okay? You know, for example, like when NVDA was breaking out and was rallying up here to 600 bucks, if you told me it was going to keep going to, you know, 820 bucks, I would have, you know, not really believed you, because trends just keep going, you know, and it's about catching, you know, that amazing 1 in 10 breakout that just keeps going. You just need a couple of them every year, and as long as you sit tight, you can just make blowout cash, okay? GTK is one of them, and it's just, I just thought interesting pointing out the difference between classical pattern traders with a profit target and a trend. I think that in a shit market, in a sideways banging away market that's doing everyone's head in, profit targets are pretty good, probably pretty smart. But in a market where we're really in a bull market and things are kind of trending up, then the whole, you know, history shows, trends show you, and just that things are going to keep trending and keep trending and keep trending, and sitting tight and holding tight is where the big money's made. I think people argue sometimes, you know, should you sell in strength, should you let it run? I mean, it depends, in my opinion, what market you're in. If you're in a bull market, let it run. If you're in a shit market, get the hell out. And that's a major difference there. So I reckon, you know, if you're looking for a new book to listen to, have a listen to the Audible on a complete TurtleTrader. It's pretty sick. You know, you could definitely, most of you get something out of it. Cheers. Catch you next week, mate.